Hello, my name is Bill and welcome to Mind Your Crypto. Today we have a very important educational video. You will learn how to use the Fibonacci retracement on Tradingview for any cryptocurrency you like and not only. Before we continue, do not forget to join our monthly subscription to learn all the Tradingview tools and of course take profits through our automated system with 200 altcoins. Patreon/MindYourCrypto is the link you will find in the comment section and in the description box. You will get the automated system as we talked about before, and also you will get a manual system with over 90% win ratio, personal guidance every day, educational videos to become expert in the technical analysis and hold your future in your hands, market updates, random giveaways, pine scripts for Tradingview, and many other benefits. So we will know the exact support levels and the exact resistance levels, so you won't have to scratch your head in order to find them. Let's continue and let's rock. So right now we are on the FTM, Phantom, USDT. Okay, you can just search your cryptocurrency here on Tradingview. Okay, this is a trading platform right there. And you can use whatever you want. I have Phantom Tether US, okay, in Binance platform. So right here, I have the 4-hour frame enabled as well. 4 hours means that every candlestick contains 4 hours of price action. Okay, so we have 4 hours of price action in every candlestick. What do we need to have for Fibonacci retracements? What do we need to know? I will just do not show actually the EMAs, it's not something important. So we have the graph, candlesticks, green candlesticks, that means buyers have stepped in more than sellers, and red candlesticks, that means sellers have stepped more than buyers and they have pushed the price down. Okay, so what we need to know, one high point and one low point. What is a high point? The high point right here, for example, is the highest we could get before we had this correction. Okay, and of course the lowest is the lowest before we had this uptrend. All right, so therefore what we have right now is that we need to figure out 2 points right there. Okay, one high and one low for our Fibonacci retracements. If we go for short-term analysis, we want to have one high and one low that it is close to each other. If we want to have a more of a midterm analysis, we can go, for example, for this low, from this high to this low. Okay, you can see that we had like 10 days, 20 days actually, from the high on 24 November to the low back on 4 December. But let's go back here. Okay, so we are in 8 October 2021. And what I want to do in order to find major resistance levels is that I want to draw my Fibonacci retracement. From the top, you can find your Fibonacci retracement on the third row of Tradingview or by pressing Alt+F. I have the Fibonacci retracement and I want to take it from the top to the bottom we had back on here, okay, on 15 October. So it was only 7 days till the low we had. Okay, so if you want to identify the high and the low, you can choose the magnet mode, and this will get you automatically into the highest point and automatically into the lowest point of the candlestick. Right now, you can see that we have some lines right here. These are the Fibonacci sequence lines. 0.618 retracement, 0.786 retracement or 78.6%, 61.8%, 50%, and so on. Okay, I'm not going to go into the mathematical type of Fibonacci or what do these retracement means. Okay, I'm only going to take you how to use it on Tradingview and to trade properly and of course succeed in finding resistance and support levels. And of course, after learning the Fibonacci retracement, you will be able to find major swing highs and swing lows. I will explain what I mean. First of all, I want you to go into the settings, which is very important. Once you click on the Fibonacci, you go into the settings right there. And then you are seeing the style. I'm not using a trend line, so I have this off. Okay, I have extended the lines to the left and to the right. I have enabled these numbers on the Fibonacci retracement that you are seeing on your screen. You can pause the video if you want to write them down. You can do whatever you want. 0.382, 0.618, okay, the 0.786, 0.236, 0.5, and the 1 and the 0 are the basic Fibonacci tools. But I have enabled also the 1.236, 1.618, 1.382, you can see here, and of course 1.786 and 1.5. Also the minus 0.382, minus 0.236, minus 0.5, minus 0.786, and minus 0.618. I do not have a background. You can use a background. You can do whatever you like. I personally avoid using a background. I have the prices, the levels, and of course, you can use the Fibonacci levels based on log scale. Okay, you can do that if you want, or you can go to the price section right there. You can see, right click on that and go to the logarithmic scale. You can do whatever you want. But anyway, let's go to the Fibonacci settings. The coordinates are the prices, okay, the high, the low, and the bars, okay, the time zone. So right here we had the 2.45 and the 1.90. If you enable the magnet, you don't want to use the coordinates as well. You don't have to, okay? So these are the main settings you should be using onto the Fibonacci retracement. Some people using the reverse. I am opposed to that. I find it better, the simple Fibonacci retracement, for my technical analysis. So now we are going back. And the best part of here is that I will tell you some myths and I will debunk some myths for the Fibonacci retracement. First myth, the 0.618 is the most important ratio of the Fibonacci retracement and on trading. False. It is not the most important. As for me, I find the most important three Fibonacci ratios: the 0.786, the 0.5, and the 0.236 Fibonacci retracement. So now, why I find the 0.786? For me, it is a very important resistance level, because after drawing my Fibonacci retracement from a top to a bottom, let's say that I was here, I would have my entry price when we would close above this line. The reason is that most of the assets that are in an uptrend, once they break the 0.786, they are about to go even higher. And we are coming now to the next Fibonacci numbers that I had. Why did I have the 1.236? Why did I have the 1.382? Why the 1.5 and so on? Because it is showing me some important resistance levels. For example, we had the 1.382 as a major resistance level back here. You can see that we went down a little bit again. After, we had also the 1.618. You can see that we didn't close above, we went a little bit down again. After, we had the 2.87 and the 2.99, which was our last two Fibonacci retracement level. What I would do right there, based actually on the price action of the asset, but what I personally would do there is that I would be selling some in each Fibonacci retracement level. But of course, I would see the risk metrics as well. If we had a very high risk, then I would sell more. Okay, but we are doing a Fibonacci retracement lesson here. If you want to have more educational videos, you can write in the comment down below. But trust me, this is one of the best videos on YouTube you can ever find, because it has some true information right there, and I do not want to be the classical moon boy that will tell you it will happen and you will get profits. Always actually profits with the Fibonacci retracement, but of course in terms of technical analysis, I am telling you this is what I'm saying is very, very important. So let's continue actually with the Fibonacci retracements. So these are the basic Fibonacci retracements between the 1 and the 0. I have also the minus 0.236. Why I have that? Because if the asset would go down from the 0, it could possibly find support level here. You can see what happened with FTM back then. It went all the way up to the 3.40, and then on the downtrend found the exact support on the 1.77. And from there we had an uptrend, went back to the 1.382 again, and went down, and of course went down from the 0.786 even. On another note, if I want to find these lows, then what I would do is that basically I would just go from here to there, okay, this one top. And you can see that the 1.618 would be a crazy, fantastic support level. Why did I draw from the bottom to the top? Because for there I wanted to find major support levels. And in order to find major support levels, for example, if you think that if you want to find a great buying entry, what you should be doing is, I am here, let's say, okay, and I am expecting FTM to drop. If I find one bottom and one top, then I can draw my Fibonacci retracement from the bottom to the top. And I could see every good support level from this area to the downtrend. You can see that we went to the 0.786 here. Usually the 0.786 is a great entry price once we have a downtrend. And you can see that we stopped around there and we had a buying pressure till the 2.27. But then we collapsed and went even lower. The best part here was that we found buying pressure on the 1.5, and from there we were just going even higher. Usually I have found very interesting that most of the assets after a downfall, let's say that they crossed down from the one line right here, they are stopping at around 1.618 or 1.5 Fibonacci retracement. And why now the 1.236 is down while before the 1.236 was up? Because now I have drawn from the bottom to the top, but before what I did was drawing from the top to the bottom. And you can see that right now we stopped at around 1.618, we had one buying pressure at the 1.5 again, and from there we started going up as well, even higher. Of course, the same applies into the 4-hour frame here. For example, on the 4-hour frame, what I would do, personally if I want to buy FTM, would be to draw the Fibonacci retracement from this top, 27 December, down to this bottom. And this would be a major resistance level, the 0.786. You can see again and again that the 0.786 is the most important resistance level. Found sell pressure, get back in, close above, and then we approach the 1.382 Fibonacci retracement. So you can see how important it is to know that the 0.786 is better than some people think. And you should always analyze and you should always have the 0.786 and the 0.5 as your major support and resistance levels, especially the 0.786 as a major resistance level. Because if we break above, we usually go even higher. There are some times that we do not go higher, forming double tops or failing and go down. This can happen, however, you need to analyze many other details, including risk metrics and price analysis, okay, so you can see for sure if we are going higher. But the Fibonacci retracements provide a perfect idea of about if we are going higher or not. So we can use it on Bitcoin even. We can use it on many altcoins right there. For example, what I can do with Bitcoin is that I would go, if I wanted more of a midterm price analysis, I would go and use the Fibonacci retracement from the bottom back on 20 July to the top on 10 November. You can see this was a bottom and this was a top. So if we use that, then we can go and say that we have one major support level in the 44,400. But if I go and use it from this bottom right there on 21 September up to this top, you will see that we are on the 0.786 we were talking about before. And therefore, we know for sure that this is a very strong support level. On the other hand, though, we need of course to close above the 0.618 even. We are bouncing for now between those two lines, the 0.786 and the 0.618. So that's why we have an indecisive in the market, and therefore the long positions do not get in as well as short positions. Now people do not trade so much. There is a lot of indecisiveness in the market as we cannot go further upwards. So right now, you know that this is a very strong support level. In case we drop down, it is not necessary that we drop down from the 1. We might be stopping around 0.786 and to the 1 support level. Here, for example, should be a great rebuying entry for Bitcoin, and we might be going even higher. If we keep finding the 0.786 as a support level, then for sure it would be good, and this means that Bitcoin would find the bottom here and it would go even higher. But why did I draw from the bottom to the top? Because I want to find major support levels as well. You can see that we can have some next targets as well, the minus 0.236 for example. It works as vice versa, okay? But within an area of a high and a low, we use it from the bottom to the top and from the top to the bottom. But the minus 0.236 could be the next target for Bitcoin. If we continue to have this bottom and this top, for example, if we had a new bottom here and we were going down, then this Fibonacci retracement could be no valid anymore. So if the price was about to go down here and make some lower low pattern and break from this area, then I would draw another Fibonacci retracement to be sure, most probably from here to the top. Okay, so the Fibonacci retracements are very good. One mistake most people do, and most people use it, is that they use the Fibonacci from 4 December to the past days, to 10 November. You cannot do that. It is not valid and it is not the proper way to do it. You always need the date sequence from previous dates to later dates, not from late dates to previous dates. Okay, so do not use it from future to past rather than use it from past to future. For example, here from 20 September to 10 November. Okay, or the Fibonacci retracement, if I want to find major resistance levels, from 10 November down to the bottom of 4 December. For example, here I would not have these Fibonacci retracements again if the price actually would go down from this bottom right here. If it would go down from this bottom and cross below the 42,000, then I would have to draw another Fibonacci retracement. Okay, so right now you can see that we have very strong resistance levels, the 48,400, in which we found sell pressure back then on 31 December. And of course we have as well the 52,300 around there, and we have the 55,500 with this Fibonacci retracement. So there you can see that the most important thing to know is that if we cross above the 48,400, the most probable scenario is to go to the next target, which will be the 52,400. So that's how you can measure on when to exit or when to buy and what to do. You need to find support levels on the downtrend, and you need to DCA yourself in there, and you need to find resistance levels, and of course to know when to exit. Along with the risk metrics, you can of course find some very important selling targets. If we have a very high risk towards approaching, for example, the 0.382 or the 0.5, then we should be selling. It doesn't matter if the price would go up 20% more, but the risk of not selling would be higher than the risk of selling. Okay, and so, for example, if you were to buy here and you didn't sell around there, you would be missing the chance to sell, and we would go further down, okay, because there is a possible scenario that we can go further down. There are other ways you can find support and resistance levels, using the skiff pitchfork in which you use it in the price analysis as well, and many other tools. But of course, this would come later into an educational video. For now, if you enjoyed this video, please give a thumbs up and of course a comment down below so I know that this work was valid and of course you liked everything about this video. Thank you so much for watching. Do not forget to join our monthly subscription. We are waiting for you. Patreon/MindYourCrypto, and of course see you soon with many other technical analysis videos and educational videos. Bye.